In this video, we're going to be sharing with you a very powerful 3-minute strategy that I have used throughout my career in binary options for the past 7 years. It's easy, it's effective, it's ideal for beginner traders, but more importantly, it is accurate when used properly. Now, as we do with other videos, we're going to be breaking down the rules for you so that you can apply it to your own trading. We're going to go over some live trading footage, but more importantly, I want to take a couple of steps back and provide you with some additional information, not only on ways on how you can maximize your profitability with these strategies, but also parameters on risk management, which can help protect you from blowing your account as well. So if that sounds good to you and you gain value from today's video, all that we ask is that you smash up the like button, and if you're new to the channel or haven't already, subscribe and turn on notifications that we miss out on any of our future updates. And after you watch today's video, don't forget to check out the information down below in the video description to access valuable information in regards to our free binary training, information of our trading group, links to free demo accounts, as well as information on automated trading platforms that we use to earn daily and weekly passive income through the financial markets. So again, you can find all that information down below, but without further ado, let's roll the footage. Let's get to it. Alright, traders, first and foremost, I do want to encourage each and every single one of you to watch this video to the end, because not only are we going to be going over this particular strategy for today's session, but we're also going to be going over some additional information that will be helpful for you, not only to enhance your overall trading experience and win rates, but we'll also be discussing risk management, which of course is crucial and a key element to prevent you from blowing your account. So as we go through this video, if you have any questions or need help, drop a comment down below, but you can also email me directly anytime, which is always best. I'm always happy to help. Now, when it comes to any type of new trading strategies or trading methods that you want to apply to your trading, it's always ideal that you practice on a demo account. So whether you're looking for a new broker that you want to apply for your binary option trading, or just want to use them for free demo accounts to practice today's strategy or any new strategies you come across in your trading venture, I'll leave the link down below in the video description for your convenience. Now, as you can see from our results, we had a profitable trading session targeting a total of 8 trades, losing only 2, delivering us a nice profit of over $1,500. And this was all made possible by the strategy that we're going to be going over for today. So the first thing that we want to do is when we come here to our chart here on our broker, we want to first make sure that we are on a 1-minute time frame. So that just means that every candlestick you see here represents a 1-minute time period of price data. Now, in order to change this, simply come here and click on this little icon, and you can choose the time frames that you want. Again, we're selecting a 1-minute time frame for this particular strategy. However, for our trade expirations, we're going to be targeting 3-minute trades. So we come here to switch time, click it once, click it again, and you'll get this little drop down menu so you can select a specific expiration time period for all of your trades. Now, even though they don't have the 3-minute option here, you can manually type this in the expiration time box here at the top. So we'll change that to 3 minutes, and there we go. So again, our chart is on a 1-minute time frame, but we're going to be targeting 3-minute expirations. Now, because this is a rules-based strategy, we're going to be using a few indicators to help us identify potentially profitable trading positions, and we're going to be following a set of rules before we enter these trades based on the parameters of the indicators we're going to be using. So the first indicator we're going to be using is a MACD at default setting. So in order to add this to your chart, simply click on this icon here, which looks like a compass tool, come here to the bottom and select MACD. And again, these are default settings. Next, we're going to be using 3 different simple moving averages. To add these moving averages, simply come here to the tool again, come here to the top, and select moving average. Now, the settings for the moving averages are custom. Our red moving average is set to a period of 26. Our yellow moving average is set to a period of 14. And our blue moving average is set to a period of 6. Now again, because this is a rules-based strategy, there are certain criteria that we need to look out for before we jump into the trades. If we were looking for a sell trade, what we first need to do is look at our MACD, and we want to ensure that the moving averages of the MACD are on the upper level of the histogram, and what we're looking for is that crossover and downward momentum, and we also want to see some negative volume here on the histogram as well. Now, for our second level of confirmation, we want to look at our blue 6 moving average and our yellow 14 moving average, where we want our 6 moving average to cross below our 14 yellow moving average. Third and final confirmation is to look at our 26 red moving average and to ensure that our red moving average is below both our blue and yellow at the point of the crossover. Once you have the 3 confirmations, you can enter for a 3-minute sell, and as you can see, this would have been a profitable 3-minute sell trading position. From our live trading session, you can see here for one of the positions that we had taken for the GBP USD for a sell, we had the MACD downward crossover with negative volume. We also had the confirmations of our moving averages, and because the criteria were met, as you can see, this was a beautiful position for a 3-minute sell trade. When it comes to buy trading positions, it's the same concept, but in the opposite direction. First, we want to look at the moving averages of our MACD, and we want to ensure that the lines are in the lower level of the histogram with crossover and upward momentum. And we also want to look for positive volume from the MACD oscillator. Next, we look at our moving averages, and we want our blue 6 moving average to cross above our yellow 14 moving average, which occurred at this level. And then our final level of confluence is to ensure that our 26 red moving average is above both our blue and yellow moving averages. And again, once we have all levels of confluences, we enter for a 3-minute buy, and as you can see, this would have been a profitable position. Going back to our live trading session, in the scenario for the Australian dollar Japanese yen, we received our confirmation from our MACD with a crossover and upward momentum. We had the positive volume from the oscillator on the MACD, followed by the moving average crossover between our 6 and 14 moving averages. And as you can see, beautiful position, which generated a 3-minute buy trade. Now, as you can see, folks, the rules of this strategy are pretty simple and straightforward, and because of the simplicity behind the strategy, not only is it great for beginner traders, but it's also quite effective. Now, one of the things that I actually appreciate about this strategy is the function of the MACD and the moving averages, where at times the MACD can serve as a bit of a fortune-telling indicator, so to speak, to get you prepared for a potential position. In the scenario here for the buy trade, once we had the crossover of the MACD, we had the crossover of the moving averages to prepare us for that buy trade. So not always, but sometimes that MACD can serve you as a bit of an alert to get you ready for a position that is soon to come in the next few minutes. We also see that here as well. We first had the MACD crossover and downward momentum preparing us for a sell trade, and about 2 to 3 minutes later, we finally got the moving average crossovers, and if we had taken this 3-minute sell, this would have been a profitable position. Now, when it comes to using any type of strategies that involve using a series of indicators, it doesn't matter if you're using the MACDs, the moving averages, an RSI, or any other indicator. It is important that we do not rely on indicators alone for placing trades. And the reason why this is so important is because the majority of the indicators out there are lagging indicators, meaning that at times, by the time you get the confirmation of your indicators, the position of the market where you should have entered has already passed. And this is a key element that we talk about in a lot of our videos. So what does this mean? Whether we're using a MACD or moving average strategy or any other strategy that involves using different indicators, what's really important that we as traders do is use these strategies in addition to what we see in the markets and our market analysis. Being able to identify what's going on in the markets, what trends you are currently in, so that way you can place trades according to that trend. And by doing this, you are giving yourself a statistical advantage over the market rather than putting yourself at the mercy of whatever the markets are going to do. Because remember, at the end of the day, folks, markets are always going to do whatever they want to do, regardless of what your indicators tell you. Now, here are a couple of prime examples of trading positions that we had taken from this session, where we combined not only the confluences from the indicators, but from our analysis of the markets and what we see in terms of structure. Going back to that GBP USD sell trading position, you can see that we actually entered the trade before we got the crossovers from our MACD and from our moving averages. Now, why do we take this position if according to the rules, we have to wait for these crossovers in order to enter the trade? Well, first and foremost, we knew that we were in a downtrend and price was reacting off of a level of resistance, which, as you could see, had tried and failed to break through that level of resistance multiple times. And because this level of resistance was from a higher time frame, and we could also see the verge of the crossover of our MACD getting ready to cross over, it was easy to anticipate that most likely price was going to go down. So because we combined market structure in addition to what we know of this strategy and what we can potentially anticipate, this allowed us to enter at an optimal level in the market, which gave us a clean and profitable 3-minute sell trading position. We have another example here again for the GBP USD, and I believe that these were the last couple of trading positions that we had taken for this session, where we ended up taking double buy trading positions for the fact that we had multiple levels of confluences between of what we saw in the markets and the rules of this strategy. In this area of the GBP USD, price had been consolidating between two levels of support and resistance. These two levels of support and resistance were also identified and confirmed from higher timeframes as well, meaning that these levels are stronger and are anticipated to most likely be respected on this 1-minute time frame. But not only did we have the confluences from our MACD and the crossover of the moving averages, we also had bullish divergence between the markets and our MACD. Now, just to clarify, a divergence in this case is where market is creating one level of structure, but our MACD is creating an opposite level of structure. Price was creating a series of higher lows, but our MACD was creating a series of lower lows. This was a prime example of bullish divergence, which in most cases pushes price back up. And this is why we ended up taking that second position. And as you can see, this was a beautiful buy trade entry. Now, I do understand that as a beginner trader, for those of you who are new to the concept of binary and forex trading, the ideas and concepts of learning structure and price action can be very confusing. But these are things that we do teach in our training group, which again, you can find more information down below in the video description. But regardless of whether you decide to join our group or any other group, I do encourage you to take the time to learn how to trade properly first, because that is how you'll be able to use these strategies to your advantage and giving you that statistical advantage over the markets. And believe me, folks, if you take the time to learn, you're going to see great improvement, more long-term profitability and consistency in your trading in the long run. Now, the last thing I want to talk about before we close this video is in regards to risk management. Risk management, or I should say lack of risk management, is one of the key elements as to why most people blow their accounts. Risk management is taking any amount of money that you have in your trading account and setting yourself a plan for what you want to target on a daily basis in terms of profits, but also a limit to what you're willing to sustain in terms of losses. Because remember, folks, when it comes to trading, you're not going to win all your trades all the time. You are going to sustain losses. That is a natural factor of trading and investing. So you want to make sure that you have certain parameters and plans in place based on your skill level and on your account. One of the best ways to calculate a daily profit target is not looking at a dollar amount, but rather a percentage of your account. Most prudent traders have a percentage daily target of 3 to 7% in daily profits that they want to accumulate, which may not seem like much at first, especially if you have a small account. But believe me, folks, if you stay consistent with whatever your target may be, it's going to accumulate and compound over time. But that also goes hand in hand with your losses. Maybe your daily profit target is 5%, but for your losses, you only want to sustain maybe 2 to 4%. So whatever your plan may be, make sure that you stick to it, and whichever you reach first, whether you reach your daily profit goal for the day or you hit your loss limit for the day, you stop trading for the day. This is why, based on today's session, I stopped trading after my 8th trade, especially for the fact that our last trade was a double position for the GBP USD. We earned over $1,500 in profit, and based off of my account, that was over a 3.58% increase in our account. Now, personally for me, I have a daily target of anywhere between 3 and 5%, and because we had reached that goal, that is why I stopped trading after my 8th trade. Remember, folks, that when it comes to being a full-time trader, that doesn't mean that you sit in front of a chart all day long and trade. Have a plan in place based on your account and based on your skill level. Have a goal for your daily profits and have a limit for any losses that you're willing to sustain, and stick to that. It might seem tedious at first, but it will help you in the long run in not only preserving your accounts, but it also helps train you mentally in being a more disciplined trader. So ladies and gentlemen, that is our update for today. Don't forget to check out the information down below in the video description to learn more about our free binary training, information of our training group, and of course services that we use to earn passive automated income through the financial markets. Again, if you have any questions, reach out anytime. And I want to thank each and every single one of you for taking the time to watch this video. Hope you enjoyed it, gained some value. God bless, take care, and we'll see you on the next one.